All right, good morning, traders. One of the things that again, if you don't know what time it is for me, um, it is 4:30 in the morning here in Phoenix, Arizona. So I obviously am sometimes very tired at this time of the morning. One of the things I failed to mention is what an unbelievably sad event that happened in the United States over the weekend. I mean, this is um, yeah, it's the biggest mass shooting ever in the United States. And I'm not here to get in political arguments. I don't use events like this to push up any type of political agenda and, or push any of my political views. I think it's just wrong. There are, too many people that lost their lives and families that are mourning at this point to go down that road, and I know too many people that do, which is very shameful in my opinion. You see them on social media. Like you see them, say, I told you, this about guns or that about guns and this about. Hey, bottom line is it happened, and there are people that are really suffering. Um, and it's a very tragic event. All right, and my heart goes out to those people in Orlando because, frankly, I have a lot of friends in Orlando, Florida. I worked with many people in Orlando for many years, and because for those of you that don't know this, Wise Trade many years ago was sold to a company out of Orlando, Florida. And so our headquarters was in Orlando for like 5 years before we sold to MB Trading. And so I work with many people, and I'm friends with a lot of people on Facebook that are in the Orlando area. And anyway, it's just it's sad to me, and it's shameful. Just when people, spout out their views on, especially social media outlets, it's like, you know, uh, you know, uh, any of it. It's just, it's very sad. Anyway, um, it was yesterday was a very, it was a tough day, and it was a tough day for America as well. Um, but anyway, I needed to cite that, and I didn't you know, first thing when I came on, obviously. So I just needed to make mention of that before we get started. All right, now I have to let me grab. Oops, why did I do that? Let me grab the charts, and let me grab the bias chart. Give me a second. I'm pulling that up right now. All right, let's get into our morning analysis. Okay, so let's start with the euro dollar. All right, so here's the euro. Now, the euro, we've come down to basically pretty key support, in my opinion. All right, we've completed the you can argue with me that, hey, we haven't quite completed it. When you have a formation, if you can get, 75, 80% of the move, then in my opinion, you've pretty much completed it. We have dropped down towards what I assume is very great support. Okay, that support down here is going to be the 121.20 area. Now, what is scary to me, not scary necessarily, scary is not the right word for me to use. What's scary for anybody who's a euro bull is that the euro dollar has spent time recovering here. However, um, it the recovery that you're seeing, in my opinion, looks what could be a it could be end up being another flag pattern. And if you're long, the euro, you got to be really careful here. I do believe that we're now kind of stuck. Um, it's going to look something like this. Okay. 112, 112.20 is going to be support, or 112.15. Any move back up towards 113.25 is going to be a short, or people are going to sell into. So I think, any move like this, you probably want to use that as a opportunity to short. Anything like this, you want to use an opportunity to be on the long side. But if you break through this 112.15 level, I don't know if you want to be on the long side anymore. You know what I'm saying? All right. Let's write down that. 112.15. That's going to be really key support. Any move up to 113.25, I think is going to be a really nice opportunity to be on the short side. All right. And like I said, we could be flagging here, and we could be flagging. We could be ready to make our way lower too. I mean, you have a chart that looks like this. Very easily, we could be doing that, and and getting ready to move lower. So just keep your eye on the euro. Be very careful with it. All right, the cable obviously is under pressure. As a lot of these polls coming out showing this damn Kiwi dollar. Equities are really bouncing. Okay. Anyway, sorry, I'm short the Kiwi at 80. My cost average is 89. Stupid Kiwi dollars bouncing. Anyway, so here's the pound. Pound, just got demolished over the last couple of days. The polls are coming out, signaling that that there's there is a risk that the leave vote starts to gain some momentum. There is a poll coming out, right? Should be coming out this morning. Hold on. I think there's another poll coming out shortly. So you got to be careful with the cable. Obviously, I'm very hesitant. I shorted the euro pound this morning at 79.58. I'm sorry. I already got out of it. Just so you all know, I already shorted the euro pound and got out of it. I got out of it somewhere around here. I got out of it like at 43. So I'm being very careful trading the cable right now. Obviously, very careful. All right. Now the pound. Let's get rid of some of this stuff. The cable, in my view, looks like we could rally, but we would be capped any move back up towards this 143 level. Okay. Any move back up to 143 is probably going to be an opportunity to be on the short side. So, like this, that's probably a good place to be on the short side if you want to be short. Okay. Now, support. Let's figure out where support is here. You obviously have horizontal support here at 140, and it's 140. Okay. Low to high, 78% retracement comes in at 40.32. Spike lows come in around 140. Okay. I think that 140 is going to be really good support. You notice how we're kind of right in the middle right now. So 140 is here. 143 is up here. Based on the lack of comments with when I said that it's really shameful when people on social media push their own political views based on some sort of tragic event that happened over the weekend, leads me to believe that maybe some of you fell into that trap, which I hope you guys didn't. Think about it for a moment before you do something like that. People lost their lives, lots, and families are mourning. And you're sitting there talking about how bad or how bad gun laws are or how this and that. Think about how other people look at you. Just an opinion. Maybe a smelly one, but it's an opinion. All right, let's go take a look at the Swissy. There's poll delays right now. They're waiting for the vote the polls to come out. They look like they're having a little bit of delay at the moment. Okay. Let's go over to the dollar Swiss. So here's the dollar Swiss. Notice this wedge that's developing, and you know what's really interesting about the Swiss? I I have been very reluctant, and reluctant's not the word I'm looking for. I've been very hesitant about playing the. I'm trying to grab. There we go. I'm very hesitant about playing the long side of the dollar Swiss or short Swiss francs, especially in this type of situation. Um, but what you'll notice here is we've got this wedge developing, and yeah, I mean it looks like we could actually break higher. I've been real hesitant to trade this, and for the obvious reasons of if there is a Brexit, I think there's going to be a rush towards Swiss francs. All right, and so I think the Swiss franc, like the cable, is going to be a very difficult trade to get right. I mean, the obvious trade is if there's no Brexit, you buy the pound Swiss, and if there is a Brexit, I don't know if you really want to short the pound Swiss, but I think that the Euro Swiss and pound Swiss are going to fall aggressively. The Swiss franc will gain strength at least in the very, very near term. Um, Again, I'm not really confident on playing it right now. Any type of Swiss moves, as much as I want to be long the dollar Swiss, it's you know, if you're super convinced that a Brexit's not going to happen, this may be the best opportunity you have to be long the dollar Swiss. I don't know, but anyway, 96.65 is going to be resistance. Support 95.75. Okay. Um, let's see. Let's go into the dollar yen. All right. So the dollar yen is at risk of breaking lower. You guys know that, right? 105.50 is major support, any which way you slice it. There's no other way to look at it. All right, if you guys don't understand the longer term view of the dollar yen, let's make sure we get a good look at it. So we had this head and shoulder pattern. As Paul pointed out, I shorted the dollar yen right here at 121, closed it when it got down to 113, 114. Shorted it again. Kind of been very careful trading the dollar yen since we've been down here through here. But I will tell you that we came down eventually to the price that I thought we were going to, which is 105.50. That's a breakout point right here. See that? Now, the fact of the matter is, um, the the fact of the matter is that this 105.50 is holding. But if it breaks, it is going to be downright ugly. And I'll tell you something, guys. The way the Nikkei is looking right now, I think there is a good chance that I think there's a great chance actually that that we break through this 105.50. Not necessarily right now, but man, 105.50. This is major, and I'm gonna put a couple asterisks there because I think it's such key support. Okay. Now, based on what we're looking at currently, you can see this is the wedge bottom right here. I'm trying to grab that blue line. Not that one. That one. Okay. I'm going to put it like this. That 106, 106.30, major resistance. And there we go. 106.30, major resistance. I'm going to put an asterisk there because I think it's important. If we break above 106.30, we're going to see a continued recovery in the yen pairs. Okay, we're bearish, and we're threatening to turn, extremely bearish if we drop below 105.50. Plain and simple. Okay, plain and simple. Again, I'll reiterate the Nikkei. Oops. The Nikkei is breaking lower. I mean, we may be bouncing right at this moment, but look at the daily chart. Okay. Very, very, very much at risk of rolling over aggressively. I know we may be bouncing right at this very second, but it's a very scary looking chart. Let's go in the Canadian. So the dollar Canadian, a lot of people have been kind of disappointed in the dollar Canadian, and looking at it saying, "Oh man, I can't believe we haven't rallied further." The thing about the dollar Canadian, in my opinion, is first of all, I think there's a lot of people that do not believe that crude oil will break lower. And I have to point that out. If you look at crude, here's crude oil. Okay, we came out of this ascending wedge. 47.50 is major support. All right, major. And if we break through that, that then opens up the door for a move to 45. Okay, but as we approach this 47.50, people are going to be very hesitant about getting too aggressively along the dollar Canadian. But I feel if we break through this support in crude, we head down towards 45. The dollar Canadian's heading above 130. All right, but there's a lot of work to do here. Now, I also will point out regarding crude, this looks like a flag pattern. that looks like what could be a possible flag. So you got to be careful. If crude starts to break, it could, it could get ugly. But that's what we got to be watching for when we're dealing with the dollar Canadian. So yeah, is it a little disappointing that the dollar Canadians had no follow through to the upside? Sure, but the flip side to that is, I think people need to be convinced that crude is actually going lower at this stage in the game. All right, now with the dollar Canadian, let's think about this. Let's remove some of this stuff, and let's imagine that low is now the low. Okay, you take the most recent highs here. You can go ahead and grab these this one too if you want. Okay, a move up to 128.50 would be the 38% retracement. Then we have another 38% retracement that comes in there from the very top. Then you'll notice that you have all this previous support comes in here, right? Let's get rid of this for a second. So a move up towards 128, I would say 128.50, all the way up, 128.40, 128.60 is going to be very, very good resistance for the dollar Canadian on the way up. So we're going to write that down. 128.50 support. So anybody who's long the dollar Canadian or short the dollar Canadian is probably thinking, man, if the dollar Canadian just drops down to 127, that would be great. If we can just get a dip down to 127 just to get out of some shorts, that would be awesome. Okay. Now, will we make it all the way down there? I hope not, but I have to imagine that it's possible. Okay. 127 is going to be support at this point. All right, guys, I'll be back in a few minutes. When I come back, we'll continue on with the Kiwi, the Aussie, dollar index, Nordic currencies, peso. Be right back. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. We're going to continue on. So let's go over to the Kiwi. Here's the New Zealand dollar. You can argue that the Kiwi actually filled the gap. When you're talking about gap filling, a lot of people like to say that you have to, candle to candle, you got to fill. Some people believe that as long as the tips of the candle, the wicks, close up, that's a gap fill. I'm in the camp that this is a gap fill. Just so you all know, a lot of people feel that you actually have to fill the gap completely to the closing price. I always say to the wick, but that's me. It doesn't mean that I'm right and everybody else is wrong. It's just that's what I believe. That's what I subscribe to. But what that really does for us today is that really tells us, in my opinion, where support is, and which would be the lows of the day. Okay, so this is really key support, 70.30. So if for some reason the Kiwi breaks through that support, you're going to see some downside, in my opinion, open up. Okay, now resistance for the Kiwi, yeah, I think, okay, if you're stuck on the long side, where are you, where would you be happy getting out? My opinion is any move above 71 cents will probably, be good for a lot of traders who are long. They'll be like, okay, well, we're back above 71 cents. I'm going to go ahead and start selling here. So that would be 71.10. Oops. This would be range. This will be range as well. The thing about the Kiwi is we had a really the false breakout over the week. On Friday, we tried to break out. We could not hold the breakout point, which in my opinion, um, is going to open up the Kiwi for more downside at some point. Okay. Let's go over to the Aussie. Aussie had a really big rejection last week. I mean, we rejected at 75 cents. That was a big deal. 50% retracement, previous support, current resistance. We slipped overnight to retest basically this support. Watch out, crude oil is showing some weakness here. We came right down to this support. So I think that this is pretty well identified right now. Let's get rid of this. Let's remove that for now. Okay. 75 cents is resistance, but I don't even know if we're going to get up there today. But I will tell you this much. Today's lows, just like the Kiwis lows today, the Aussie, same difference. The low here, which is 73.60, is going to be critical. 73.60, it's going to be critical support. Now, resistance on rallies, you have to imagine if you're on the long side, at 75 cents or somewhere near 75 cents, you're probably thinking, okay, well, if I can just get a rally back in the Aussie, I'll be happy getting out of it at a little higher. So is it right here? Or is it right here? I think this is all a zone. Maybe I'll give it up to 74.50, but we might not even make it all the way up there. So 74.50 is resistance. Dollar index. Okay, so here's your dollar index. Now, oops, that I didn't want to do. Okay, so the dollar index almost hit the 618, which is at 94, let's just say roughly 94.75. Now, if we can take the from the very high, I'm wiggling this around so you guys all see it. Okay. We also stalled at the 50% here. So, and any move up here is going to be a problem. Back up towards 95 cents. This is going to be really key on the way back up. Whoops, I didn't want to do that. So any move back up towards 95 cents is going to be a big deal. But it looks like, in my opinion, we're boxed here in the dollar. Like any dip down to here be a place for longs. Any move up to here would be a place for shorts, something like that. Okay. So that support comes down right here. 94.25, and then 95 resistance. It's key resistance, and we are definitely range bound. Oops, range. Okay, let's go take a look at the peso. Now the peso is crazy. I mean, you talk about crazy strong. Yeah, look at that peso. Whew. Dude, heaven forbid if you've been stuck on the short side of that thing. That's just a gnarly move. I mean, from 1810 to 1875. I mean, so this is a big deal now. If we break 1875, we are gone. I mean, we are going to be testing 1950. So at 1875 is a big deal, any which way you slice it. 1875. All right, let's go 4 hour. Let's just assume that that high is sticking. 38% retracement comes right here at 1850. So any dip towards 1850 is going to be supported. All right. Here's the US dollar Norwegian krona. This thing is strong too. So 618 stuck us. And that previous support right through here. Massive move out of that descending wedge. So 829. Because if that breaks, then you know that it's just continuing higher. All right, now dips. Dips to 823. We're in a range, but I'll tell you that is going to threaten to turn bullish soon, especially if crude continues lower. Okay, let's go over to the Swedish krona. Now, the Swedish krona last week was like the last couple of days. I mean, it was just like Thursday and Friday. It was new high after new high after new high after new high. It was like unstoppable. No, I was not long. Anybody who's short this thing is probably thinking, oh my God, please stop. Please stop. That's key. We break through this 1831. We're testing 840, and probably going higher. So 830, actually it's 832. Now where's support? Got to think how far a dip's going to be contained here. You got a 24% retracement, maybe a dip to the 38% retracement right here. Should be 823 roughly. Okay, and that's in a range. All right, your bias chart is done. It's finished. So there you go. Sorry, I'm just kind of looking around really quick. Getting my bearings straight here.